You know, one thing that's funny about the current state of affairs with our economy and the government and the Fed telling us that everything is okay when in fact we all know it isn't, is the fact that the Fed's beige book, which is something that they release publicly, is pointing to the opposite. Even though they're telling us everything is good, their most recent beige book release actually reveals some very serious problems with the economy, guys. And there's like this top 5 reasons in here of why we are headed for a major economic crash. And I'm gonna go over them with you. I don't know about you guys, but I'm tired of being lied to. But at least if you're willing to look a little bit further into it and check out some of the details, you can discover the truth on your own. And I think that's why a lot of people enjoy watching these videos, because I'm doing that for you and bringing it to you in a format you enjoy. Now, the first thing that the beige book outlines that is a major problem right now that is being overlooked, but I talk about this a lot here on the channel, is just how painful it is right now for low and to middle income households, because these are the households that are suffering the most right now and are getting slammed the most with inflation. Because the lower your income is, the higher chunk of these increased inflation costs eat into your monthly budget. So it leaves you less money left over each month versus somebody who makes a lot of money. They're paying inflated prices too, but they still have a lot more disposable income left over at the end of each month in order to pay for additional expenses or take that vacation or save money and invest it and still feel good about life. According to the Cleveland Federal Reserve, 2/3 of nonprofits in its district reported that low and middle income Americans have experienced a decline in their financial well-being over the past 6 months. Shocker, huh? What have we been talking about here on the channel? And it says, moreover, nearly 3/4 said that the availability of affordable housing decreased amid rising rents, the loss of units to blight, and insufficient unit supply. The Federal Reserve Bank of Philadelphia also reported that contacts from many sectors noted that lower income households are struggling with high prices and high interest rates. Repossessions and delinquencies on auto loans were rising due to higher interest rates and car prices, particularly for low-income households. Another shocker, guys. Wow. Who has been saying this for a while here? You know, and this is from the Fed's beige book, by the way. This is quotes from this book. This is not me making this stuff up. This is from their own findings and their own reports. But then you get Jerome Powell up there on TV talking about how everything is fine. We're going to hold interest rates steady. Inflation's coming down, and there's really nothing to worry about. The economy is still chugging along strong. That's why we can keep these interest rates higher for longer, because we're not seeing any meaningful movement in unemployment or the labor market. You can't believe this stuff anymore, guys. You just can't. Because on the surface, some of that stuff is true. But when you dig just a layer or two deep below the surface, we can see that it's not true. And if you think this is just in select regions across the country, it's not. In fact, this is a national problem, according to the Federal Reserve Bank of Dallas, who reported sustained high demand for nonprofit services, including things like food pantry services, health insurance assistance, and basic clothing donations. Cost of living is an ongoing concern, and more people were looking for second jobs to make ends meet. Once again, according to the Dallas Fed, not according to Michael Bordenero. And you know, the sad part is, guys, is people look at this and like, oh, well, I don't see that in my neighborhood. You know, like very snobby sort of reaction to this. Like, you know what? You might be doing well off in life, but that doesn't reflect everybody's reality, guys. And people need to understand that there is a large chunk of our population out there that is struggling right now. And even if it's not you, don't live blindly in a bubble and think that none of us are going to be affected by this, because eventually the problems are going to continue mounting from this, and we're going to see some major economic consequences from all of this eventually. And then you have the Federal Reserve Bank of Chicago noting that for low-income people, inflation, particularly rising housing costs, remain a challenge for household budgets. Despite efforts to increase the supply of affordable housing in the district, high costs for materials and labor have slowed progress. So the number one reason, as we can see here, is all related to the cost of living continuing to go up and the cost of housing being unaffordable for many right now, which is been the main theme of my channel for many months now because I think it is the #1 issue on everybody's mind. Well, the second reason the Beige Book says things are not going so great right now is because inflation is now hitting nonprofits. They say that nonprofits themselves are facing a crisis. Inflation has caused the cost of providing services to increase, but there has not been a corresponding increase in funding. Sounds like everybody else's household. Nonprofits are also having a hard time holding on to employees because their turnover has been pretty high, especially in New York State, where workers are leaving for more lucrative and less stressful roles in the public and private sectors. So people have had enough of trying to help everybody out and do good with the nonprofits, and they're just ready to move on and start taking care of their own family because they're probably not making enough money either. But guess what, guys? This has a ripple effect in the service the nonprofits can provide, because with shortfalls in funding and staffing, people who receive social services such as child care, mental health, and housing placement, and senior ambulances have experienced increasing wait times and service reductions due to people quitting these nonprofits. These nonprofits are also taking a tremendous hit in the amount of people who needing the services. They say that households and community members sought assistance as they faced challenges with the cost of housing, utilities, food, and health services. And they're facing a 10.5% decrease in the amount of donations that these nonprofits are receiving as well. The next thing, profit margins are starting to shrink. All right, after years of booming business cycles throughout all of this economy, guys, when all of these big corporations were raking in the profits, okay, now that is starting to change now. In fact, according to the Beige Book, officials at the St. Louis Federal Reserve said that inflation, although it only modestly increased in their district, firms continue to note higher costs are compressing profit margins as they are unable or unwilling to increase prices to customers. Well, we know for a fact that most companies these days have no problem increasing the prices to their customers because we're all feeling that. And we also know that these companies are letting people go because the layoffs so far in 2024 have been monumental, guys. So people are losing their jobs by the hundreds of thousands so far this year. And these companies are trying to protect their bottom line. But you know, I keep talking about fast food a lot because fast food and restaurants right now are some of the businesses that are in the biggest trouble because people do need to eat, but they don't need to eat expensive, overpriced food away from home. So these businesses are getting hurt the most right now. And you know, you have the expenses, especially labor costs at these restaurants going up, but they can't really raise prices anymore to compensate, which is the biggest problem you're seeing in California now with this new $20 per hour minimum wage for fast food workers. Like, how much can you realistically charge for a Big Mac and fries before people stop coming in? You know? So these businesses right now are between a rock and a hard place where they have to pay people more by law in some cases, or just because they can't get any employees if it's not by law. And then they have to raise their prices, but they can't raise them too much, otherwise they lose all their customers. So these guys are bleeding from both ends right now. And the same is true for a lot of other businesses, but restaurants operate on razor thin margins. And guess what? It's a luxury to eat at a restaurant. People don't need that. So it's one of the first things people cut away from their budgets when they're looking to reduce their expenses. And then the Kansas City Fed, they say there's significant increase in operation expenses that has impacted margins for different businesses. They anticipate greater difficulty passing along those operating costs to customers, thus further compressing profit margins. So as you guys can see, businesses in general are on the hook right now. They're in trouble, guys. And the more businesses that decide to let people go or close down due to hardship and they just can't make it in this economy, that's going to be the beginning of this major recession that I believe has already started, just has not gotten severe enough for most people to see it just yet. I think the Fed might be watching my YouTube channel because the fourth thing from their Beige Book that points to economic trouble right now is pricey insurance weighing on consumers. What was my video yesterday about? The entire video was about how ridiculous the insurance is, guys. In March, car insurance prices spiked 22% from just a year ago, and nearly 3/4 of homeowners said their home insurance spiked in 2023. And I can guarantee you they're going to go up again in 2024. And according to the St. Louis Fed, one insurance agent reported to them that homeowners saw 20 to 25% annual increases on insurance premiums in their district, guys. So St. Louis is in Missouri/Illinois, depending on where you want to call it, which side of the river. But, you know, St. Louis is not in Florida. It's not in California. It's not in Texas or in all these big three places where you're seeing major issues with insurance. It's there, and they're seeing 20 to 25% increases. The Atlanta Fed also reported notable increases in insurance premiums in its district in recent months. They say that rising insurance premiums and HOA fees in coastal markets remained a challenge for homeowners on fixed incomes. And the Kansas City Fed flagged rising business operating expenses with a notable growth in business insurance costs as one of the key issues in its region. So no matter what kind of insurance you need right now, whether it's for your business, for your house, for your car, for your life, for your health, doesn't matter, it's going up. They say one of the biggest glaring issues that we have for last year, for this fifth reason of why this whole economy is coming crashing down right now, guys, is the office real estate problems. As we know, office real estate is crashing majorly right now in price and in value and in occupancy rates and everything meaningful that gives office real estate any sort of value at all. They say on a nationwide average, office real estate values have slid 15% nationwide since the start of 2022. But we know that if you look at some specific examples, there are plenty of them out there where you're seeing office buildings selling for half, or if not less than half, of what they sold for 5 to 10 years ago. In fact, office vacancies hit a record high in the first quarter of 2024, and forecasters are expecting the problem to just continue to get worse over the next few years. According to the New York Fed, their region is having a substantial weakening in demand for office space and vacancy rates that are skyrocketing right now. So what kind of effect is that going to have on New York's economy? I guess they're going to have plenty of room to put all of their new migrants that they keep welcoming into the city on a daily basis. They can just put them all up in the empty office buildings. They say that all in all, financial strain amongst property owners in New York City continued to build as debt service payments rose. There is no way out of this, guys, okay? Somebody's going to take the hit, and it's going to be the banks. We've gone over this a bunch of times before. But the people who own these commercial properties have the right to just give them back to the bank with no problem, okay? They can just hand the keys over to the bank and walk away from the place. But now the bank is stuck with it. So what are they going to do with it? Well, they're going to have to sell it to somebody else and take a major loss. And when they take that loss, guess what? The bank may experience such financial hardship that they may end up going out of business. The Boston Fed says that the risk of financial distress for large office buildings remains elevated right now, and the Philadelphia Fed noted that transactions in the office sectors are continuing to drop because investors are waiting for discounts on distressed properties. So yeah, somebody's going to come in and buy up these office buildings eventually for, 10, 20 cents on the dollar, like we're already seeing happen. But you're not going to see anybody rush in there to buy it before it gets cheaper than that. The only glimmer of good news, if you can even call it that, in this beige book report is that they say, according to the Minneapolis Fed, that in their region, the commercial real estate sector slightly improved and demand remains strong. The office sector has stabilized and subleasing fell modestly and workers were gradually returning to the office. So great. In one city in Minneapolis, things are getting a little bit better, but that is not a reflection of the overall economy. So one thing you have to constantly ask yourself is, if all of this information is readily and publicly available in the Fed's beige book, then why don't they just come out and say this? Why doesn't Jerome Powell get up there every time he makes a speech and talk some real talk with us and say how things are really going? Well, I'll tell you why. Because if he does that, that is going to spook everyone into thinking that we actually are in a recession, because we are, and it's going to prevent people from spending, and it's basically going to just speed up how fast we hit this recession. So the goal is to extend and pretend. Let's extend how long we can lie about this before it's no longer possible and super obvious that what we're saying is total BS. So let's extend that for as long as possible, and simultaneously we'll just pretend that everything is as good as we're saying it is until we can no longer claim that, when things have gotten so bad that it's obvious that we're lying. And people got to understand, there's no accountability with the Fed or Jerome Powell, guys. If he's wrong about the economy, or he gets caught lying about this, or they're wrong about how long they should have interest rates higher or lower, whatever, there's no repercussions. He's not going to lose his job. He's not going to lose his pension. He's going to be rich no matter what. This guy is going to retire pretty soon, and he is going to sail off into the sunset and be just fine regardless of what happens with the economy. So remember that. But what this beige book also reveals is that you can basically forget about all these interest rate cuts that we've been hearing about since the end of last year. Oh, there's going to be 7 rate cuts in 2024. Keep dreaming, guys. Probably going to be none. Here's something else that's funny too. They say, well, the numbers that we get from all of our data doesn't actually reflect the pessimistic outlook of all of our surveys that we put out there that basically make it sound like the economy is worse than it is. So they're trying to tell us that the economic data, like the jobs numbers and the unemployment rate and all of this, is more important than what people are actually telling them of what's happening with their business. Like, what? What are you talking about? These numbers don't mean anything. All that really means anything is, are people hiring? Are they firing? Are they opening up businesses? Are they closing businesses? That's the stuff that really matters, because guess what? Once that stuff starts happening, then they're really going to see their unemployment numbers and their jobs numbers collapse, and by then it's going to be too late, because they're not listening to what people with boots on the ground are actually saying. I mean, there are literally so many other signs out there, and I can't even get into all of them in this video, guys, but I will get into one more thing here, because one of my viewers that owns a small business wrote me and told me just how bad things are going right now. So I will give you the lowdown on that. So this guy, he owns a shop in Texas that manufactures livestock equipment. And he says during the years of COVID, he had about 12 to 16 weeks of orders, okay? Now they have only about 1 to 2 weeks of future orders on the books, guys. That is like an 80% decline in business right off the bat, which is absolutely horrible. And he says, when I go to shipping yards to drop off my crated products, their warehouses are half full, and they say things are okay to bad in terms of less than truckload volume. He says that he's flooded with people trying to become his new freight broker, trying to sell him new tech services like an enhanced website and materials that go into manufactured products. But he says he can't use any of their services or materials if he doesn't have enough orders for his products. So you guys can see, that's just one example of how the small business cycle can be completely disrupted if one business isn't doing well. This guy doesn't have the orders to actually hire another business to help out with their marketing and pay them for that website and help get them even more customers. So it has a ripple effect. So then that second business starts to suffer as well, because they can't get the clientele they need. But luckily this guy is smart, because he says he has no debt, he has no mortgage on his building, and he keeps his finances nimble and lean. So he's likely going to be able to come out of this on the other end pretty successfully, guys. But business owners that are levered up in debt and have accounts payable through the roof are going to be the ones that are going to be closing down. He also says that every small business owner I know is struggling. The gravy days are over. A lot of people are piling their costs onto credit cards, and they're using it to pay for higher rent and groceries or their business costs. And he thinks this is not going to end well. Well, that sounds a lot like what I've been saying here on the channel, guys. This is a real life reflection of what's happening with a real business in America right now. He also says that he sees it in his local housing market, because he's in Houston, Texas, and houses that used to sell in a matter of days are now sitting empty for months or even over a year in some cases. And we know that Houston is one of those markets where inventory has also been exploding. And I literally have so much more information, guys, that I want to share in this video, but I try to keep them sort of around the 20-minute mark for the most part to make it a little bit easier to digest. So I will save the rest of it for a future video, but rest assured, none of it is good when it comes to the state of the economy, guys. We're talking about weakening demand from other business sectors. We're going to be talking about how the recession outlook is coming back like the shark from Jaws, okay? But I just hope people, when they hear this, they really do take this stuff seriously, because sometimes people think that, oh, Michael, you're just, talking about this stuff just to get everybody riled up and to get views. Like, well, yeah, the idea is to get views on YouTube. You don't have a YouTube channel if you're not getting views, number one. But I'm talking about stuff that people know is happening and they understand that it's true, and people want to be ahead of the game by understanding that this is where things are headed, by listening to real life accounts of small business owners and picking apart the Fed's beige book on all of the real life problems that businesses across the country are pointing out. I think that's probably worth listening to. You can go ahead and ignore it if you want, but you're probably not going to get any sympathy from me or anybody else when you end up blindsided and broke during this major downturn. So if you guys enjoyed this video, make sure you subscribe to the channel, and if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.